guys. Hi guys, it's Duro-Fadipe here, SDF if you will, and I'm delighted once again to come your way. I know it's been a long time, and guess what guys, I have missed everyone. I'm so sorry, it's just been a little bit busy with the guys of the inner circle. Okay, we had a few new intakes, so I've been trying to properly, mentor them so they can get value for the money paid. Okay, so yes, I've missed everyone. I think it's about 2 or 3 weeks since I dropped a video here. Honestly, I don't feel too easy about it, but sometimes they say life just gets in the way. Okay, so I want to wish our Muslim brothers all over the globe. I want to wish you happy celebration, Eid al Kabir, right? I hope I'm right. Yes, happy Eid al Kabir. Um, Back at the salad to all of you, and I hope this season brings us some good tidings. Okay, and if you're a subscriber here too, I'll be expecting to get my salad. You know how we do it. All right, so today basically I want to show you a simple strategy that you can put to use, and it's basically price action. Now, if you have followed me for a while, you know that more particular, even though I've shared strategies with indicators and how you can, you know, make the best out of this, you know that my go-to way of trading, or my primary way of trading, is price action. All right, so everything I like to share, revolves around price action, because I believe, price action doesn't lag. Okay, price action is the only true metric that can give you what the market is doing. All right, because it's showing you, it's being printed in real time, it's telling you what the market is doing in real time, which makes it really, really powerful. Now, everything you see on your chart carries information embedded in every candle I have seen on your chart. Okay, so it's important to know what they stand for in order to stack up the odds in your favor, and in order to ensure that you're trading with an insane advantage. All right, you're always going to have bad trades, no doubt about that, but then the whole idea, if you have a good way of trading and a very good risk management approach, it's something that's for sure is that you will be profitable. You're going to have losing trades, but you're not going to blow accounts. Okay, and that's exactly how you measure success. I've said it over and over again that the way you measure success in trading, it's over a long period of time. It's not a day, it's not for 2 days, it's not for 3 days, it's in months and in years. Okay, how well as your strategy, or how well as your manner of trading paid off over a long period of time. Okay, because we've seen people that do well in the first week, fail the second week, and also just keep going around in circles. Okay, so you want to trade in a manner that you're guaranteed 80 to between 75 to 80%. You want to put the odds in your favor, and you want to trade with an advantage. All right, so what I want to share with you today again is how you can put price action to use. Now, if you know me, I'm not against the use of indicators. Indicators, when properly used, can also give you an edge. Okay, when properly used. Unfortunately, a lot of people use them blindly, which is why they end up getting their fingers burned. Okay, but of course, if you learn how to use these things properly, it's always going to give you an edge. All right, and so today I just want to show you how to use the stochastic indicator and use that to trade, coupled with price action, in order to have a very good edge. Okay, you want to have an edge, you want to have stack up the odds in your favor. All right, now first thing you want to do is we are going to be combining the candlestick formation called the pin bar, all right, plus your stochastic overbought and oversold. All right, now in this case we're going to use 80. Level 80 of your stochastic is going to be your overbought level, and level 20 is going to be your oversold level. Okay, so again, you want to find pin bar formations at those levels. Okay, so let's get right into it. Wish we could do this. Okay, fine, the one is just playing out now, so we'll just be on the lookout. But before that, let's back test a little bit. What you need to do is, now in this case, this is boom, right? This is boom. Clearly, when we have boom, you want to sell it, right? Okay, you want to sell it. Now this is a downtrend, as you can see. You can see making lower lows, lower highs, lower lows, and that. Okay, so it will remain this. It will remain. We'll say that this is a downtrend until we have a high level that will displace this high. And if we now start getting higher highs and higher lows, then we say that the structure has changed. But for now, the market structure, we are in a downtrend. And I say this every time, that the best way to trade is to trade in the direction of the dominant trend. All right, so clearly we can see now that this is a downtrend. So we want to do more, or unless you're trying to trade pullbacks. But here, if you're trading the trend, if you want to trade the impulse, because you have the corrective waves, you have the impulsive waves. Okay, impulsive wave is impulsive wave is basically the dominant direction of the market. That's the impulsive wave. All right, the corrective wave is the pullback. All right, now after the pullback, then you're going to have a continuation. Okay, so in this case, we know that this is a downtrend, so we expect markets to move more in a downward direction than it will move in an upward direction until structure changes. But for now, the structure is still on the downtrend, lower lows, lower highs. Okay, so it's still on the downtrend. So what am I going to expect? Now, so take a look at this. I'm going to wait to see a candlestick formation. All right, a candlestick formation that confirms that the price is about to move into the other direction. I will explain what I mean. Now take a look at this. You see, this stochastic, usually you have the K percent and I think it's the K percent and the D percent. Yes, the K percent and the D percent. I'm going to okay, let's see this. K percent. K percent and the D percent. Okay, so let's check it. You see, we have the percent K and the percent D. All right, so what we want to see here is this one, which is the K percent. You see, when it's crossing this above, then we want to now confirm it with price action. Again, this is the best way to use indicators. I've said it. You can't use them blindly. You need to use them just for confluence. You need to use them as confirmations. Okay, so now in this case, this is price. It has oversold, right? It has gotten to this point and it has oversold. All right, remember we said that this 20 is the level we're taking as our oversold. All right, now this percentage K, this particular one, has crossed over this 20 and it's beginning to go up. All right, now once that happens, you want to check your price action and you want to see a bullish pattern. Okay, you want to see a bullish candlestick pattern as confirmation. Okay, a bullish candlestick pattern. Now let's take a look at this, where we got this oversold. Okay, when it actually crossed this line, let's use this. When it crossed this line, check it out here. And by the way, this is a 15 minutes time frame. So when it crossed this line, check it out here. What did we see? We can find a bullish engulfing candle. All right, now once you get this bullish engulfing candle, it's an indication that this market is actually about to buy. So if you entered it here, you could enter this buy and buy all the way. Now, where is your take profit? Where is your take profit? My take profit will be at where this thing crosses the 20, crosses overbought downwards like this. When it crosses it back downwards, that's going to be my take profit. Now, that's this point. That means my take profit will be somewhere here. All right, this is a free strategy I'm sharing with you guys because I need everyone to profit from this market, guys. Knowledge is what drives profit. I say this every time. There's no point, running from pillar to post trying to look for what works. When simply what works is right on the charts. What works is you observing what the market is doing. Forget about these custom indicators there. Yeah, they work, but of course, your knowledge of how the market actually plays out, how those candles are printed on your chart and what the information they carry, that's what's going to make you profitable long term. Take that from me, guys. Take it from me. All right, so now you've seen this, it has crossed this level. Now we've gotten a bullish candlestick pattern. What does that tell us? It tells us that it's going to buy. Okay, and if it goes into a buy again, I'm not going to take my profit till this line tries to cross it down backwards. Now this is not a perfect strategy. Okay, so let me be very upfront. Let me be very upfront with you. Remember, I said that the whole idea is for us to trade with an edge. All right, we want to trade with an edge. Okay, so if you do this, you're going to be trading with an edge. Okay, so this one crosses right here, and now we have a bullish engulfing, which is a confirmation that this is about to go into a buy. And yes, indeed, it went into a buy. So you could have bought this and you hold on to it till it actually crosses this 90 down backwards, which is an indicator, which now invalidates this buy. Okay, now once it crosses here, and you can see once it crosses here, it's time to now start looking for sell opportunity. You're no longer going to buy. But then the sell opportunity you're going to be looking for again, you want to see a confirmation from the price action. So let's take a look at this. When this crossed this downwards, what did we find here? We found another bearish engulfing. Bearish engulfing is an indication that the market's about to go into a sell. And yes, indeed, it went into a sell. Then if it goes into a sell, at what point do you take profit? Again, when this one crosses back upwards here, you take profit. So I'm going to push this to where you're expected to take profit. So we're going to take profit here. So that way you are trading both ways. You're trading upwards, you're trading when it goes up, you're trading when it comes down, provided you see formations, candlestick formations to validate the setup. Okay, it's important. We are not doing this just because this has gotten to oversold or because it has gotten to overbought. No, once you see it there, you also want to see a confirmation with the candlestick formation. You want the price action to confirm it to you. All right, so we'll take other examples. Okay, and we're not going to be cherry picking, so we're just going to take it so that we can. Oh my god, I just took out the. I'm just going to put it back. I just took out my. Okay, so I'm just going to put it back. All right, so that's it. Okay, so let's take a look at this. Did we check this before? Okay, let's take a look at this. Now, take a look at this. This came all the way down, then it bought up to here. Okay, now this is price. Okay, we said it already. Look at it. It went all the way to the top. Okay, so at the point where it's crossing downwards, if you take a look at what happened here, this is why you don't want to just follow overbought or oversold blindly. Take a look at what happened here. It looked like it was crossing and it went back before it finally crossed, which is why you have to use the price action to confirm it. If we're just using this blindly, oversold, overbought, this was actually overbought, right? And it looked like it was going to cross this line, but guess what happened? It went back. But if you were using this candlestick pattern, you know that this was a false signal. You were not going to enter this trade because of we did not have any. You check it, even if it was having. I know we are just checking this in hindsight right now, but even if you were looking at it in real time, you find out that it didn't give any bearish pattern confirmation. Okay, any bearish pattern confirmation. All right, so look at this point where it actually crossed it, and we got, what did we have here? We had a bearish engulfing again. Now this bearish engulfing is confirming to you that this market, this price is actually oversold. Excuse me, it's actually overbought, I mean, and it's about to go into a sell. So this was a confirmation that this was going to hold, and yes indeed, it bought all the way down. What is your take profit again? Your stop loss, by the way, will be the top, the eye. Okay, because you're going to enter after the confirmation of this candle. All right, so your stop loss will be the eye of this. Okay, the eye of this candle. That's your stop loss, the eye of this candle, because your entry should be made just after this candle has confirmed that there is actually going into a sell, that it's going into a sell. So here we got a bearish engulfing, which is a confirmation. So you could have entered right here. So what is your take profit? I said your take profit should be where the percentage K crosses this line upwards again. And here, look at it here. This is where it crossed. So you could have entered this trade and held on to the trade up until here where it crossed it. I hope this is making sense, guys. Up until where it crossed it. upwards here. Okay, now so you could have held on to this trade up until here. Now take a look at what happened the moment you crossed it again. What are we seeing? We are seeing that now the market is oversold, right? Now it's going into a buy. It crossed this point 20, right? Now after crossing point 20, what do you want to see before you go into a buy? You want to see a confirmation with your price action. Guys, I cannot overemphasize this. I cannot overemphasize this. Price action is key, it's important. All right. Now, if you take a look at this, it was crossing here, and what did we have? Here we can call this, what we have here is a tweezer bottom, right? Call this a tweezer bottom, right? Now look at this. After we got this, an indication that was going into a buy, and what did we have? After this pattern, after this confirmation of this, then you could have entered this trade here, and you could have gone on, held on to the trade up until where this actually crosses downwards again. All right, so you could have held on to the trade from here to when you have this crossing backwards. Okay, and that's it. Now this is why you don't want to just blindly take this trade. I'm going to show you something here. Now look, take a look at what happened right here. When price got here and it was about to cross, see, look at the candlestick formation we had here. All right, it was an inside bar. Candlestick formation we had at this point was an inside bar. As you can see it, that's this not okay. It was an inside bar, so I wasn't going to take this. It shows inside bars show consolidation. Okay, so if I was going to take this trade just because it was at overbought, then this would have been wrong and a wrong entry, even though it pulled through. All right, but because this candlestick formation we're having here is an inside bar, which carries an information that this is a consolidating phase. All right, now after seeing this, you want to wait for this line. You want to wait for this line to cross this line downwards. And following that, you must see a candlestick pattern that suggests to you that it's actually going to sell. Okay, and yes, indeed, we got this. It's a bearish engulfing. Look at this. This is a bearish engulfing, right? Well, a bearish engulfing, yes. You can call it a bearish engulfing or a tweezer top. You see, the names of these things, I tell people every time that the names don't even matter. Okay, it doesn't matter to me much the name. It's just important to know what it means. Okay, the information they carry, that's what matters. I don't care about the names of candlestick patterns. You don't have to worry about it. What you need to just know is what do they represent. Okay, now in this one is an indication that sellers have hijacked this market, and you see it has overwhelmed the buying pressure. All right, and that's an indication that it's now going to go into a sell. Now if you did that, if you check this out, you went into a sell again. After this, remember, you're not entering on this candle. You want to see a complete, you want to wait for this candle to close up. All right, and once it's closed up, you then want to take your trade downwards. Okay, all the way down, up until when this line crosses this one back up. Okay, that's when you want to wait up until. And I said that your stop loss should be the eye of this candle, this particular one. All right, you're not taking the trade on this candle, but that's the eye. Okay, then you make your trade from here and hold on to the trade till this line crosses this one upwards again. So the take profit would have been somewhere here. I don't want this video to be too long. We've been running for about 90 minutes already, so I'm going to stop this right now. Hopefully you understand the message I've passed across in this video, and I'll show you that if you put this to practice, you are going to get good level of results. I can assure you that. Okay, now this is it, guys, and I hope this makes sense to you. I hope this helps you in your trading. And for those that are still asking if the inner circle is still open, of course it's still open. Feel free to reach out to me. My contact details will be in the description. Feel free to reach out to me, and I might just cut you a deal. You know, in the spirit of the season, it's either Kabir, it's a Salah period right now, so I might just be willing to cut you a deal. All right, but trust me, you must be able to prove to me that you're a Muslim. Okay, and that I would expect to get meat from you before you can claim this bonus. I assure you it's going to be a fantastic bonus. but you must be able to prove to me that you're a Muslim, okay, for you to be able to claim the bonus. So feel free. That offer would only be valid for today and tomorrow. So feel free to reach out to me if you would like to key into our inner circle and for more fantastic ways to trade. And honestly, I'm blown away with what guys in the inner circle are doing. Amazing results here and there. I mean, it's amazing to see how regular people that probably were neophytes in the beginning have graduated into being professional traders in a matter of days. It's so amazing, you know. So feel free, guys, to reach out to me and let's talk about it if it's something you'd like to take advantage of. All right. So let's take a look at this, for instance. Look at this. It came out from here. All right. So you could have taken the trade from here, but before you take this trade, remember that you must see a candlestick formation that is suggesting to you that it's going to hold. And yes, we got this bullish engulfing, right? So you could have taken this trade, then you hold on to it up until this line crosses back down. So you could have taken this trade and then make this your take profit. Somewhere here will now be the take profit. This works, guys, but there are other ways to actually make it even work better for you, all right? But I'm reserving that for the inner circle members, all right? But I can assure you this works if you put it to use and you consider the key things that matter before you enter this trade. Okay. Thanks a lot for paying attention. Feel free to reach out anytime and I'll be more than willing to attend to you. Thanks a lot for paying attention. Till I see you again, be safe, trade cautiously, and I wish you all the best. Cheers.